So I want to come back and cover some Forex Trendy information. I haven't. I think I updated it about a month ago, back in August. So let's just take a look at some of the patterns that had played out. Last time I did this, let me just double check the date. My last video was August 27th. So let's look at all the ones that occurred after that date. So we're going to look at September. And that's what we're looking at right now. And if you haven't checked out my Forex Trendy review, up on the right here, you can click that and just head over and check it out. So this is the members area. Because I'm a swing trader, I'm only interested in daily charts. I do look at the 4-hour charts for people that like a little bit shorter time frame. But for day trading patterns, you're best looking at swing trading patterns. The longer a pattern holds out, the more realistic you can expect any sort of trading opportunity from it. Yeah, you can get them on the shorter time frames, but for me, if I look at 15-minute charts, 10-minute charts, 5-minute charts, I think there's a lot of random noise in markets, but patterns have stood the test of time. So let's take a look here. We'll look at the pound Aussie is the first one, and you can see that we did break out here, and the entry price on this, on the pound Aussie, was at 1.6705, which is in this area right here as soon as it broke out. And you can see that we rallied up to 71.68. Okay, so that's actually a really nice trade. And if you look down here, we have some targets here. And since we got as high as 71.68, we didn't reach any of our targets, our fib targets that are being used on this daily chart. And we did get a retrace. But understand that just like anything, you have to manage your trades. And when price action is showing you this move up that you can see here, pull back, put in a double top, and the price starts to reject, you might want to take some action with your trade. Okay, but you did have, a trade that entered at 67 and it went as high as 71. That's a nice trade, just over 300 pips right there. The pound yen, now the British pound has been pretty good actually for a little while. This on the 15th of September, a break at 147.53. So right there, 147.53. The first target was 148.44, and we absolutely got that one. Our next one was at 151.94, and the other one after that was 156. So we actually made it to our at least our second target. So you're looking at just over 400 pips right here. So on those two trades alone, that's 700 pips. Not bad. And you can see that once you enter trades, you're not sitting here, throughout the day managing these trades. These are swing trades. These allow you to make a lot of pips and at the same time actually have a life. Now, believe me, I did try the day trading route and I did okay with it. I wanted a life, right? It just, for me, it was not sitting in front of the computer throughout the day looking to trade. So once I built my account up, and I could at least take trades that have semi-decent position sizing, I just switched to swing trading, and I have not looked back. And I say swing trading, that also includes position trading. So two quick trades. Let's go down to the 4-hour chart. This is a buy signal in the euro-yen on the 12th, and it was a break at 130.79, and as you can see, it certainly has gone. And it does a bit of a pullback right here. Does not come back inside, right? So you got to make sure you put your stop. And even if you put your stop, however you're going to do it. I'm an ATR stop person. I like using the ATR. 134.46 as high as this went. So you can see that we actually got to our second target. So let's just take 134. This is a 400 pip trade right to the top here. Okay, off of a flag pattern. And obviously, because we're going to the upside, this would be known as a bull flag. Right, so trade, nice trade there. Gold. Let's take a look here. It was a buy at 1302. And you can see this one didn't work out, right? And it's right here, 113.02. Went as high as 13.14. Still not a bad little trade there. Obviously didn't hit any of the targets here, and then price collapsed. Again, 4-hour chart, keep that in mind. But again, when you start seeing price rally and just break down like this, you're going to have to use your brain and get out of that trade. Understand that when you get pullbacks are obviously either a natural evolution of price, impulse, corrective waves. What you don't want to see on a breakout, especially one with momentum like this, is you don't want to see such a strong pullback against you. If you see that, It's a problem. Another thing I want to point out that I do trade breakouts, but I trade it more with a basing pattern near the highs. When you get this low here, this range here, and prices shoots right out like that, be concerned. Okay, when it just shoots out like that, a lot of times you're going to get these pullbacks like this. Okay, so when prices basically goes from the bottom, rips right through, be very careful. All right, be on alert for pullbacks like this. Aussie CAD, 4-hour chart again, 97.52 is a sell, and you can see that it broke down, got down to 97.01, which we don't even, no, 96.99. We don't get our target. And again, you can see what's happening here. Again, 4-hour charts, right? Even just looking at price patterns, you can just see that, you know, a downtrending market is lower lows and lower highs, right? That's what we get through here. This one, this is crazy. You took out all these highs here. We put in a higher low here, a lower high, and then we slam through this. So then you start getting into the whole, the pattern of a downtrending market, right? And then we get this rally, strong rally against. And just like the other trade there, once you start seeing this kind of price action, it's time to get out of your trade. They're not all going to work, right? There are some traders that trade these and they get a 30% win rate. But it's how you manage a trade. And you just look down through here. This is actually the forming of a triple bottom. You get the 1, 2, 3. When this kind of stuff happens, you might want to consider exiting your trade, right? You got to actively manage these when you're on a 4-hour chart, more so than a daily. U.S. dollar against the Swiss. It's a sell signal. Again, very, very choppy. This happened on the 29th, and basically you got nothing on this trade. Went down to 96, didn't even get the first target. So you can see already that our daily chart patterns have done pretty decent. Swiss yen, a buy at 16.12. Again, look at this. Boom, falls right back in, right? And the overall trend on the 4-hour is up. So for this, using this as your trend determination. But if you look down, I don't think I have a Swiss. Let me just take a look here. Let me look over. So this says to go long on the 4-hour chart, right? Off of the pound yen, sorry, the Swiss yen on the hourly 4. Okay, let's look at the trend of this on the daily chart. Let me see if I can find it here. Sorry for scrolling. Oh, I can't find it. I probably don't have enough on this page. I have to change my settings. You just want to make sure that you are trading with the proper trend. Let's find another 4-hour chart. Let's take a look at the Aussie. You know what? Let me find one first, and I'll put the view back on. The only one I can find on this one is the gold, and the gold is on an uptrend on the 4-hour, and it's actually on an uptrend on the daily chart as well. So you would take that trade, just like I said. You can see it pulling back like this, and it just pulled back from the support here. But also understand this. This so far, I'm out of topic right here. This pullback that you see here in gold has not exceeded this. What this does here, this trend drawdown, is you can expect this kind of a pullback on the daily chart and not lose our overall uptrend. Okay, this is actually a form of trading called symmetry, where pullbacks can equal, you know, the same pullback distance. Because this is the biggest pullback and it did not invalidate our uptrend, this still keeps us in an uptrend. Okay, I'll just show you one more of those just so you can understand that, because there's some misinformation about this. Look at the Euro Swiss. Euro Swiss. You've got the pullback here of 278 pips, trend drawdown of 20%. Well, we haven't had any move bigger than this. Okay, so what this is basically just telling you that if this one was to continue to pull back this same distance, we have not invalidated our uptrend, because even after this big pullback, we still made higher highs. Okay, it's a pretty useful tool, actually. It's actually useful for setting your stop loss. For example, if for some reason you took a trade here and you wanted to set your stop, you can actually use, we know that if price comes down this far, once again, that your trade is going to no longer fit this pattern of a 271.4 pip drawdown. That's a huge stop, obviously. I'm just showing you the example of this, and then you get this pretty much a double top, and then the move down to the side on the hourly 4. So that's how you can use this. So even the pound US, this is a big drawdown right here, but we still have an uptrend. So this is basically saying, again, until we exceed this is actually still an extreme pullback, obviously, in the context of this overall uptrend. But if we do get a pullback of, 500 pips, it does not necessarily mean our uptrend is over. Okay, because you can see this one here was 597 pips, but it did not invalidate our uptrend. Okay. Anyways, you can saw from the patterns that these the daily charts work really, really well, and a lot of price pattern traders you'll find very rarely trade them on low time frame charts, dailies and weeklies. It just gives the price time to set up, and you want to see nice moves away from them. So that's that. Sign up for Forex Trendy. Give it a shot. It's a recurring monthly. You can cancel anytime. But so far, anyone that's really bought it through me, I've only had maybe 2 or 3 people stop using it. And I know a lot of people see the value in trading a chart pattern on a swing basis. And you can see there's no indicators. You don't need an indicator if you understand price patterns. All right, thanks.